given the following information for Goa City Urban Bank for the year ending 2020. Now friends, this data is given to you. Now standard assets are given as 30,000 lakhs. Then substandard assets are given as 2,200 lakhs. Then these figures for doubtful and loss assets are also given. Now also assume in the question that substandard and doubtful advances are fully secured. And also given is profit before tax for the bank is 850 lakhs. Now answer next 7 questions based on data given. So the first question of our case study is, what are gross NPAs for the bank? And these options are given to you. Now friends, this case study is based on my lecture of income recognition, NPA provisioning and provisioning coverage ratio of my BFM case studies course. So those of you who are enrolled into this course, you can easily tackle this question. So just pause the video and try it yourself. Now as we have discussed, gross NPAs equals total substandard assets plus doubtful assets plus loss assets. So as you can see in the data given, substandard assets equals 2,200 lakhs. Then doubtful assets are given as 2,200 lakhs. And lastly, loss assets are given as 600 lakhs. So on totaling this, we get gross NPAs equals rupees 5,000 lakhs. Thus the correct answer for the given question is option D.
Friends, are you preparing for CAIIB? But every time you open that bulky textbook after your hectic banking hours, all your motivation disappears.
And did you know after recent CAIIB syllabus revision, the pass percentage has dropped sharply according to official IBF data. And the main reason is not that bankers are not studying enough, but the reason is the massive increase in syllabus and non-availability of smart preparation resources.
Here's the problem you face.
The questions are deeper, more conceptual and drawn from every corner of the syllabus. Which means if you rely on those surface level materials, you walk into the exam hall underprepared.
Luckily for you, there's now a solution.
Let me introduce to my CAIIB Masters Pack, which is created specifically for the new CAIIB syllabus and upgraded exam pattern. For each paper, you get summarized notebook covering entire syllabus in my own words, in depth but not bulky. Along with that, you also get the conceptual question bank, filled with chapter-wise case studies, numericals and exam-oriented conceptual questions, and that too with detailed solutions. The format is designed to keep you motivated even after a long banking day, while still preparing you for in-depth conceptual questions. So here's what you get. You get 8 books covering all the 4 CAIIB papers, which contains complete syllabus notes, conceptual question banks, detailed solutions and personal support. All this in one package designed for your ultimate success. Friends, if you are serious about clearing CAIIB in your very next attempt, then stop wasting time with scattered resources.
So click the link below, get your CAIIB Masters Pack and start preparing smart.
The next question is, what total provisioning is required to be made in profit and loss account for Goa City Urban Bank for the year ending 31st March 2020? And these options are given to you. Now friends, to solve this question, please note this provisioning one-pager. Please note down this provisioning percentage for all types of assets. So just pause the video and note it down. So friends, let's start calculating the provisioning for all the assets given in the question. So for standard assets, amount given is 30,000 lakhs. And as per our chart, percentage provisioning for this is 0.40%. So 0.40% of 30,000 equals 120 lakhs. Then for substandard assets, amount given is 2,200 lakhs and percentage of provisioning is 15%. So 15% of 2,200 equals 330 lakhs. Then next comes doubtful assets. And assets that are doubtful for 1 year, amount given is 900 lakhs and percentage of provision is 25%. So 25% of 900 equals double to 5 lakhs. Then next doubtful for 2 years, amount given is 600 lakhs and percentage of provisioning is 40%. So 40% of 600 equals 240 lakhs. Then next we have for 3 years, amount given is 400 lakhs and then percentage of provisioning is also 40%. So 40% of 400 equals 160 lakhs. And lastly, doubtful for more than 3 years, amount given is 300 lakhs and provisioning percentage is 100% as per our chart. So 100% of 300 equals 300 lakhs. And lastly, we have loss assets. Amount given is 600 lakhs and percentage of provisioning is 100%. So 100% of 600 equals 600 lakhs. Now friends, to calculate total provisioning, we have to calculate all these individual provisions. Now this comes out to be 1975 lakhs. So the correct option for the given question is option A. The next question is, what is gross NPA ratio? And these options are given to you. Friends, gross NPA ratio is simply gross NPA divided by gross advances. Now gross NPAs we have found in one of the previous question as rupees 5,000 lakhs. And gross advances is basically sum of all these advances, that is standard, substandard, doubtful and loss assets. So gross advances equals 30,000 plus 2,200 plus 2,200 plus 600 equals rupees 35,000 lakhs. Thus gross NPA ratio will be simply 5,000 divided by 35,000 multiplied by 100 equals 14.28%. So the correct option for the given question is option C. The next question is, what are net advances of the bank? And these options are given to you. Now friends, net advances are gross advances minus provisioning. Now gross advances we have found in previous question as rupees 35,000 lakhs. And provisioning we have found in previous question as 1975 lakhs. So net advances will be simply 35,000 minus 1975 equals rupees 33,025 lakhs. Thus the correct option for the given question is option D. The next question is, what is net NPA ratio for the bank? And these options are given to you. Friends, net NPA ratio is net NPAs divided by net advances. And in this formula, net NPA is simply gross NPAs minus provisioning. Now, gross NPAs we have found in previous question as rupees 5,000 lakhs and provisioning is 1975 lakhs. So, net NPA equals 5,000 minus 1975 equals 3,025 lakhs. Now, friends, we are done with numerator. Now, denominator is net advances which we have found in one of the previous question as 33,025 lakhs. So, let's put both these values in the formula. We get net NPA ratio equals net NPAs, that is 3025, divided by net advances, that is 33,025 lakhs, which equals 9.16%. So the correct option for the given question is option C. Next question is, what is provisioning coverage ratio for the bank? And these options are given to you. Friends, provisioning coverage ratio is a very important ratio. And this is calculated as total provisions divided by gross NPAs multiplied by 100. Now, if you are confused with provisioning coverage ratio, that is PCR in short, then please go back to the lecture and revise the concept of provisioning coverage ratio again. Now, both these figures we have found in previous questions. So, provisioning coverage ratio or PCR in short for the bank will be total provisions, that is 1975, divided by gross NPAs, that is 5,000 multiplied by 100 equals 39.5%. Thus, the correct option for the given question is option B. And last question of the case study is, what is earnings to net NPA ratio? That is ENPA ratio for the bank. And these options are given to you. Friends, ENPA ratio is a very important metric for any bank. And it is calculated using the relation profit before tax divided by net NPAs. Now, profit before tax is given in the question as 850 lakhs. And net NPAs we have already found in one of the previous question as 3025 lakhs. So ENPA ratio will be simply 850 divided by 3025 equals 28%. Thus the correct option for the given question is option A. Friends, I hope this very important case study is clear to you. Please revise all the questions since NPA provisioning is favorite topic of CAIIB BF. And year on year many questions are asked from this topic.